In this lesson, we're going to talk about your chart of accounts so that you're familiar with the words. Your chart of accounts is broken out into your balance sheet and your income statement, and I'm going to start with the balance sheet. We're going to go through your assets first and go down in that order. So first of all, assets are what a company owns. And it includes, and we're going to look right here at the sample. I'm in QuickBooks Desktop sample file to show you what a typical chart of accounts looks like. As you can see, some of them have numbers. You don't have to have a number, but the old style had numbers. It just depends on what the client needs or what you need. For example, the first is your bank account. So you're going to have any checking accounts, each checking account listed separately. Any savings accounts will go in here. Those are your main accounts where the root of all your information comes from. And the other accounts are not as heavily used. The next account is your accounts receivable. What accounts receivable means is that is what your customer owes you. When you invoice a client and you're awaiting payment, that is going to sit in accounts receivable until you get that payment made. Petty cash, that's generally a little cash box that you keep in your office. If people needed to, get paid cash, it's not as common right now, but it's still, people have a need and they set it up. It's generally a small amount, a couple $100. But what you do is you keep it in a metal box, and the balance is on your, right here, this one's $500. So they probably have in the box $500 worth of either the cash or the receipts that they need to enter into the software and get reimbursed by the by your bank to replenish it back to the $500. That's the purpose of having it there. Undeposited funds is just simply a QuickBooks account. It means you wrote out your deposit ticket and you haven't actually gone to the bank yet. It's not something that a customer normally has set up. It's an automatic account made by QuickBooks. Inventory asset, that is the value of any inventory you have on hand that you're going to turn around and sell to a client. And you're going to have it in there, in that account, by the valuation process that the company uses. And we'll get into that in further lessons about what those options are. Employee advance is if you advance any of your employees' money, it's actually an asset to you while you're waiting to get that back. So it sits there when you write the check to them, it goes into your employee advance account. Prepaid insurance or any kind of prepaid expenses is also considered a current asset. That's where you write a check, and insurance is a fantastic example. If I wrote a check for the insurance for the year for the building, I would put it in there and I would want to expense it out over the year so that when I'm looking at my monthly financial statement, it'll have the right expense, not the whole entire amount in 1 month throwing it off. So you use that account to get that spread out across the year. The next group of accounts, there's about 6 or 7 of them, are your fixed asset accounts, and that's where you're going to be listing items that go on your tax return to be depreciated. So think of it this way. They're not consumable items like a paperclip or a piece of paper or pens. It's going to be a car. It's going to be a building. It's going to be equipment. It's going to be a desk. It's going to be things that are over the threshold that your accountant or tax preparer helps determine. And each company is different. So larger companies have higher thresholds on what they're willing to expense. But this is where you keep track of the value, what you paid for your asset, and you also have a contra account, which is called your accumulated depreciation. That's always a negative number, which seems a little weird, but it's in there so that you have your net value. When you go to turn around and sell these items, you're going to pull out the accumulated depreciation for that particular item and the asset. So both of those will come out when you do that journal entry. The next item is security deposit. Let's say you are renting a building and they want 1 month's rent security deposit. This is where it will go. You're not going to expense it because they're going to give it back to you. You're going to write the check and code it here. And that concludes all the asset accounts that you will find on your balance sheet.